Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for November the 2nd, 2011. Now, to get started, tonight we're going to be looking at the iShares Comex Gold Trust, the IAU, excuse me. Now, the reason we're looking at this is we have the Fed announcement tomorrow on Wednesday. Now, we're going to have a very, very choppy, volatile day. So under these particular conditions, I limit my trade, but I also look for areas that are showing less volatility while trying to stay with the primary trend. Right now we can see we've had a significant retracement down on gold. However, we've closed at 1677. We're still above all three of the Vantage Point predicted moving averages, 1678, 1664, and 1651. Our primary trend remains up. Now, when we look at these crossovers, the dollar's been on a big rally today. Not surprisingly, I talked about this extensively in the Forex Weekly Outlook this week. Now, we can see the short-term crossovers to the downside, and that's expected with the rally in the dollar index, but the medium and the long-term crossover remain net bullish. So our predicted short-term difference, is moved down below the zero line, but that's normal. It reacts very quickly to market conditions. Our predicted medium and long-term differences, however, are staying long. Our predicted true strength indicator and the predicted MACD both showing a buy signal. So again, we want to really stay long here on gold, but I don't want the exposure to the gold futures market, so I'm going to go to something less volatile, which is the iShares IAU. This has been a very good trading vehicle for gold, and we're going to stay with this. So let's go now and fine-tune our entry point using the Vantage Point daily report, specifically the predicted high and predicted low. For tomorrow, we have 1659 as the low, 1683 as the high. We're going to buy this area. Intraday traders are going to close out at 1683. That's going to be your intraday trade. Stops on this should be down around the, I would say, 1570 area. Now, looking at the chart from a medium and longer term perspective, we shouldn't have any trouble getting back towards this 17 mark in the days ahead. My view is the dollar will continue to rally, but only after it takes a bit of a kicking from the Fed. The Fed is certainly a dollar bear, and every time Bernanke gets up there, he kills the dollar in some way or another. Now, the good thing is, I believe the ECB, the RBA, has already done that to the Aussie dollar, and I believe the ECB will do that to the euro this week. We have a lot of things going on in the Eurozone, so if things are not really looking that great in the US is a safe haven flow currency for sure, but so is gold. So I believe they're going to flock more towards the US dollar and towards gold, so that's what gives us our bias. Now, when we look at how Vantage Point's been calculating the predicted high and predicted low on the Comex Gold Trust, you can see that we've had quite a push lower today with this big dollar rally today that I warned about in the Forex Weekly Outlook. So I believe we'll recover from this and we'll start to push higher. Now, that's our first trade for tomorrow. Now, our second trade is going to be in the US-Japan currency pair. I've been talking about this pair what seems to be months, guys, is that we're playing this channel for 2 months. It's gone flat. All we're doing is buying dips. I've talked about this again with my own clients and in the Forex Weekly Outlook that I felt the levels between 75 and 76 will hold. Bank of Japan will intervene based on the fundamentals. Simply don't make sense that the Japanese yen is this strong. Now, after a currency intervention, usually the preceding 24 hours is very important. In this particular case, intervention appears to be holding. Now, I'm not saying that it'll continue to hold. What I'm saying is we've got through that crucial 24-hour period and the dollar yen remains above the 78 level, which is pretty impressive considering none of the other central banks that we know of were involved. Now, let's have a look at some of the key levels: 76.73, 76.90, and 77.60. We've closed at 78.32, which is a very positive sign that this intervention is working. So in this particular case, the first thing I'm going to identify is stops. Stops should be below this 76.73 level. We can see that we have a triple EMA cross from Vantage Point. We actually have not had a completed triple EMA cross like this. I don't even, to be honest guys, I'm going to have to back this out so we can actually have a look at this. I believe it's been a very long time. As you can see, it has. The last time we had a triple EMA cross to the upside, we were probably almost a year ago. So this is a pretty significant event here that's happened. So for now, we can surmise the predicted MACD, the predicted TSI, the predicted short, medium, and long-term differences all are pointing higher. What I want to draw everybody's attention to, however, is the predicted short-term difference. It is extending somewhat high. I don't like where it is, but it's not completely overbought. It has room to move a little bit. So with that said, let's go into the daily report and see what we've got from Vantage Point. We know we're looking to buy a dip. 77.52 is the predicted low, 79.08 is the predicted high. Now, I believe this to be a decent entry point. We can see here the predicted short, medium, and long-term differences have all turned positive. It's been a very long time since we've seen that also. So for now, intervention appears to be working, much like what we did on the Swiss franc with the Euro Swiss franc, the US Swiss franc, pound Swiss franc, which I've done with my own clients. We've remained net short on the Swiss franc. While in this particular case, we're going to remain net short in the yen. We're going to buy dollars. 77.52 is our entry point tomorrow, maybe slightly above. For your more aggressive traders, they can look at the 77.77 level. I'm okay with that. And again, we want our stops down below the 76.70 level. And our first immediate target is 79.08. Now, if we continue to hold these levels, we should be able to get to 80 and potentially higher than the 80 level in days and weeks ahead. But the number one killer of a dollar rally is, of course, Mr. Bernanke and the cronies with the Federal Reserve. So we have to be mindful of this. We can expect a pullback in dollar yen either prior to the FOMC or just after, but we're looking for this 77.52 level to hold. And again, your more aggressive traders, 77.77, getting in around that area. Keep your stops out of that broker radar. So with that said, these are the market positions for November the 2nd, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.